GM, good morning. Welcome to Milk Road Macro, the weekly macro show that knows that Elon versus Trump is yet another example of a happy couple being torn apart by too much spending. I'm your host, Jay Hamilton. It's Wednesday, July the 2nd, and today we are joined by Noelle Acheson. She's got 10 years of experience in capital markets. She's a former managing director of research at CoinDesk, and now she's the author of Crypto is Macro, which has some of the best coverage of the intersection between, you guessed it, crypto and macro trends. Today, we're going to get Noelle's thoughts on the role that crypto is playing in the global changing order. There is a shift happening in power right now, a shift happening in monetary policy, and Bitcoin is playing a big role in that. And Noelle likes to say that Bitcoin is the truth machine behind what is happening in the global changing order. We're going to talk about that. We're also going to talk about a crypto catalyst that could drive big flows, which no one is really talking about, but Noelle pointed this out in a recent newsletter. And finally, what's really going to make Bitcoin go higher in the next rally? What does Noelle see coming for the next few months? Before we jump in, macro is confusing. I know that, you guys know that, and we are doing our best to fix that for you on a weekly basis with this show. But beyond this show, we also launched the Milk Road Macro newsletter. It's twice a week in your inbox, short, simple, to the point, to help you understand the crazy wild world of macro and make sure that you're staying up to date. Hit the link in the show notes to subscribe. Today's episode is brought to you by Nexo, the platform that grows your crypto without locking away. It's also brought to you by Ledn. Get cash without selling your Bitcoin. Without further ado, Noelle, welcome to Milk Road Macro.
Jay, so good to be with you. Thanks very much for having me. I'm still chuckling about your Trump-Elon joke. It was excellent.
Shout out to John, who's backstage, for coming up with that one. Let's start with you named your newsletter a very interesting name to me. You named it Crypto is Macro, which I love, because that is literally the exact, I should have named our show that. That is perfect. But I'm curious what you mean when you say that. What do you mean when you say that crypto is macro?
I've been focusing, as you have also, Jay, and many of your listeners have also, on the macro impact on crypto markets, what rates are going to do, what Powell is saying, what the institutional investors, when they finally get here, are going to be doing, etc. You know, we've been hearing that for years, but for years I've been more interested in how crypto is going to impact macro, how blockchain technology, crypto assets, new types of marketplaces are going to impact the way traditional markets work and the way global economies are going to be treating monetary policy. Crypto is macro now. It's not just the macro crypto directional impact, it's the crypto macro impact that is increasingly becoming important. And I got to be honest with you, Jay, I'm a bit taken aback by how fast this is playing out.
Interesting. What do you think? What did you expect in terms of timelines, and what has led to the speed or the change in transition of those timelines?
Well, obviously, a big deal was the regulatory shift in the United States, the change of mood with the results of the election in November. But it would have happened anyway, to be honest, simply through attrition, simply through institutions finally buckling down and doing their homework and understanding that this asset class offers something new. Professional investors are always looking for something new, the edge, the alpha. And when the institutions get involved, the regulatory organizations tend to follow behind. So it's accelerated because of political developments, not just in the US, but starting there and rippling around the world. But it would have happened anyway, simply through attrition, because the use case has been obvious to many of us from the very beginning.
It's so true. It certainly ties into a theme that we've been talking a lot about recently on the show, which is that this, if you've been within crypto for more than one cycle now, this cycle is very different than past cycles. And one of the big reasons it is different is because the institutions are here, regulation is coming, legislation is coming, and we have bigger players in this market in a way that we haven't. And we're a mature market, which we really weren't a mature market quite yet. It was this cycle, especially with the Bitcoin ETF, that really helped us hit that maturity. I don't want to focus so much on crypto yet. I want to focus more on macro, and then we'll come into crypto throughout the episode. Right now, macro's always a complex and
Yeah.
a massive topic to discuss. Can you give us your 30,000-foot view of how you are thinking about macro in 2025 right now?
A lot of noise, there's that, but that's why your 30,000 view idea matters more than ever. And I recommend that everyone, sure, the noise is interesting and we all get addicted to the adrenaline, but taking a step back and understanding that the noise doesn't actually matter. What matters for portfolios, for individual savings, for retirement plans is the longer term. And the longer term is one of currency dilution around the world, largely due to geopolitical uncertainty. And it is also increasingly going to be due to financial manipulation is, I guess, a kind way of putting it. And by that, I mean financial repression, certainly, stimulus, definitely, capital controls, for sure. And that is the bigger picture. The unemployment data, we just got some ADP figures out earlier today, which were much worse than expected. Market doesn't seem to care at all, because even the market seems to be understanding that noise, the bigger picture matters. And we've all heard the saying, nothing stops this train. It is definitely that, but I would extend that even further. It's that at a global level.
Yeah, I want to actually, this perfect segue into what I wanted. My next question is, you've talked a lot about how the global order is changing. There's a lot of old institutions, a lot of ways in which central banks communicated, ways in which our monetary policy and our economics were controlled, which are shifting right now, but they're shifting slowly. Ray Dalio also talks a lot about this. I'm sure lots of our listeners have listened to Ray talk about this or read his books. What's your view on the old order and how that is changing right now?
Nobody likes to give up power. And that is, I think, one of the big catalysts coming up. Power shifts. It always does. Ray Dalio is definitely onto something. And I know you've spoken about this before, Jay, as well. Power shifts largely because of building frustrations and satisfaction and the power of the ballot box, if we're lucky. And those in power don't want to let go. We've seen that in the world's leading democracies, and we've certainly seen it in countries that are less democratic. Where there is repression, there is resistance. And repression, again, has its spectrum. Obviously, where there is repression, there is always resistance. And that leads to the uncertainty that highlights some of the narratives supporting the crypto market at the moment. And so that, going back to your earlier question, that is the bigger picture here. It's not so much about when the Fed is going to cut rates. I don't think that matters, actually. It's not so much about what the unemployment rate is going to end the year at. I don't think that's relevant either. What matters is the growing social dissent, the growing social unrest, the growing financial repression, and the shift of the axes of power that we're seeing. Uncertainty is going to be the defining narrative of this interregnum. And none of us know what's coming next, and which is why we should plan accordingly.
Mm-hmm. Okay. And what is Bitcoin, and you could extend beyond Bitcoin to crypto's role in that space? And I like this term that you've used, that Bitcoin is a truth machine. Unpack that for us.
Let's focus on Bitcoin, because so many of us, and I'm guilty of this myself, we say crypto when really we mean Bitcoin. And again, we'll come back to this, I imagine, but it speaks to your comment on the maturity of the space. I would argue that we're not quite mature. We're more mature, but we're nowhere near mature yet, because right now there's just a lot of, again, noise and confusion and chaos and many different narratives. Good thing, that's a good thing, but it is also very confusing for the institutional acceptance that we hope will bring a lot of liquidity into the space. But going back to your question, so let's focus on Bitcoin. Bitcoin is the ultimate store of value. Yes, it is also a risk asset, and I can explain a bit further along why it is both of them and should be both of them. But right now, let's focus on the store of value narrative, which is what's relevant really for the longer term uncertainty. Bitcoin is the only liquid asset traded today whose supply has nothing to do with price, nothing at all. Even gold its supply goes up when the price goes up. And when gold is at, $50,000 an ounce, it'll be economical to extract gold from seabeds and from asteroids and who knows what else, from seaweed. I don't know. But Bitcoin's supply schedule is not only transparent, verifiable, it is unaffected by the price. And that is the ultimate characteristic of a store of value, something that we're seeing more and more longer term investors understand. More and more nation states are understanding this also. So when you are looking for a way to rebalance a portfolio of reserves, savings, pensions, whatever, in the face of colossal uncertainty, then you go for something that you know is not going to be vulnerable to either price surges, or that is not going to be vulnerable to manipulation from those that issue it, or that is not going to be vulnerable to politics or even financial repression. And that is gold to some extent, because that's the familiar asset, and that is also Bitcoin. Now, that is one bracket of theses that I'm sure many of your listeners are familiar with, the store of value. But the uncertainty in the world is also relevant for those that see Bitcoin as a risk asset, which it is also. And that is in times of uncertainty, especially when the authorities want to hang on to power, they're going to basically print, not only because of the growing uncertainty leading to a greater need for defense spending. We're already seeing that, and it's just getting started. But also, you want to keep people happy, so you're going to give them free lunches, theoretically speaking, or maybe even literally speaking. I forget who it is. Indonesia is trying free lunches now, and that's not going too well. So where's this money going to come from? It's going to come from currency dilution, which leads to the store of value thesis, but is also going to come from stimulus, which will flood the market with liquidity, and that will push up asset values. And Bitcoin is, again, arguably, in theory, one of the most sensitive assets to risk sentiment, because it doesn't have any cash flows and it has no variable inputs.
Where do you think Bitcoin is in its journey between being this store of value asset versus being this risk on asset? Because we love to talk about, every time there's a macro event, every crypto Bitcoin person comes out and says, oh, Bitcoin's decoupling. Look, it's not following the NASDAQ. It's not following the S&P anymore. It's not a risk on asset, right? We love to talk about that, but then we always get proven wrong. And it's still, I think you really did explain it well. It does sit in both camps. But where do you think it goes in the future? Does it stay as both of these? Does it continue? Does it grow more into a store of value asset? How do you think about that in the coming years?
In my view, it's both. And it's more as well. I mean, I personally hold Bitcoin because it's a new technology. That is one of the narratives that is very overlooked, in my opinion. It's a new technology, and it's a store of value, and it's a risk asset. I'm very excited about the new technology side of it. However, coming back to the both, and the two main buckets are store of value, risk asset. The reason it's both is that it has the characteristics of both. That means it will generally continue to behave like a risk asset, because risk traders tend to be more active than longer term investors. Those that see it as a store of value, they're going to buy it and they're going to sock it away and forget about it, right? And again, that's one of my theses as well. But the risk traders, they churn, and prices are always set by the last trade. So they are the price setters. And for them, Bitcoin will always be a risk asset, because that's what they're looking for. And it's good at that. It's volatile. It is not sensitive to any of the traditional inputs that other risk assets tend to be affected by. So as long as people see it as a risk asset, it will behave like a risk asset, and there's nothing on the horizon to stop them from seeing it as that. And it will also increasingly, especially given the growing awareness, and especially given, fortunately, the growing need, it will also always be a store of value. And here's why it will always be both: because there's no one to decide that for us. There's no marketing team. There's no boss that will say it's this, that, and the other. No one gets to decide. And that's one of the most beautiful things about it. Bitcoin is, to any investor, what he or she want it to be. And this may sound very hand wavy, but it is actually really kind of amazing as well. It is, a slight digression here, also what gives Bitcoin a floor way above any other risk asset. Think of risk assets generally, and for the floor for most of them, it's zero. But for Bitcoin, it can never go to zero because of its multitude of narratives. There will always be someone in the world who is willing to exchange Bitcoin for some reason. Someone will want it as either a store of value or a payments technology or a risk asset, and no one can switch it off. So therefore, somewhere in the world, Bitcoin will have value. And again, are there any other risk assets you can say that of?
No, no, certainly not. And it's interesting that you brought up that third narrative, the technology innovation narrative, and you bring up payments, right? The original white paper aimed for Bitcoin to be a method of peer-to-peer payments, right? It was basically what stablecoins has become. Now, does it end up being that? I don't know. There's a lot of people experimenting. There's a whole L2 experimentation happening on Bitcoin. There's NFTs on Bitcoin. The amount of experimentation on Bitcoin is enormous. So that innovation narrative is also interesting. I don't think a lot of people don't really pay attention to that or talk about that because the store of value narrative is taken over and becomes so big, especially with the ETF. Does the one thing that comes up for me is a lot of these we really want those investors who are in Bitcoin want the store of value narrative to grow, because we look at gold and we say, okay, great. If we can hit gold's market cap, if we can be 20 trillion, 18, 20 trillion, whatever gold's at today, wow, that's a massive increase from where we are right now for Bitcoin, 10x increase. So, and a lot of the predictions that we see for Bitcoin revolve around that's one of the simplest ways to look at, okay, where do you think Bitcoin could be like 5 to 10 years from now? But I wonder though, if it continues to trade like a risk on asset, that volatility will scare away a lot of institutional investors who say, hey, that's not part of our mandate to invest in things with that much volatility. How do you think that through?
I don't think that's an issue anymore. I think it was back in 2016, 2015, not anymore. And the reason I say that is because just look at the derivatives market. There is a endless supply now of ways in which institutions can hedge their risk, and they know what they're doing, so they'll know how to do that. And this is going to continue to progress once perpetual futures are traded freely in the United States of America. So it's not an issue anymore because of the sophistication of the market. The CME listing of Bitcoin futures was a very big deal. Yes, it marked a top of the cycle, but that's largely because of the run up in anticipation. What it meant was that institutions could now get sophisticated on Bitcoin, and that's generally a minimum requirement for them. Now, there are futures, a variety of them. There are options. There are all sorts of sophisticated products, even ETFs that can offer you hedges. So it's not a barrier anymore. And anyway, Bitcoin's strangely, and I don't have a good explanation for this, becoming less and less volatile. Bitcoin at the moment is roughly as volatile as stocks. And that is absolutely astonishing. And I was looking yesterday at the implied volatility index for Bitcoin. In other words, what options traders think is coming. And it is at its lowest point since 23, where nobody was interested in Bitcoin, if you remember. So it's not that volatile anymore. I think the volatility will come back because, again, Bitcoin is a risk asset, always will be, therefore it always will be volatile because there's nothing to stop it from being so. And that's volatility of Bitcoin, again, it's not a bug, it's a feature. You can hedge it away if you're interested in doing so. But if you are a risk trader, you want that volatility. When Bitcoin has low volatility, generally that does mean a relatively low interest. That's where we are now. Which is why I don't think we're mature just yet. And I don't think the institutions are as active as they will be in the second half of the year, largely because, again, the market's sort of on pause. It's like we're all holding our breath.
If long meetings and judgmental bankers are your thing, Nexo's probably not. Nexo is a premier wealth platform built for people who value their time and money. It's built for people who have idle cash lying around and want it to grow fast. Whether it's Bitcoin, Ethereum, or even Forex-pegged assets like USDT or USDC, Nexo offers up to 14% annual interest and access to crypto-backed credit in under 24 hours. Your assets need a platform built for growth. Join Nexo.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com Ledn, spelled Ledn. Yeah, let's talk about that for a second. Let's zoom into this year, where we are right now, and what you see coming for the second year. What makes you say that we're on pause right now versus we might have more action in the second half of this year? What's coming? What catalysts do you see?
Well, right now, again, not much has happened. Bitcoin's bouncing along within a range. Every now and then it'll break up or break down and then go back to its range, bouncing along. And this is surprising given the tailwinds. There are just a lot of tailwinds building up, and we are hearing headline after headline of treasury purchases. You wonder, when is the buying going to start moving the price? Logically, it should. I think what we're seeing is we're just in a transition phase. A lot of people who bought at very low levels have been selling, taking profits. There's some shuffling going on, some rebalancing as well, because Bitcoin has done so well. And we haven't yet got enough momentum to break to the upside. And it's easy to say, I mean, you and I followed previous cycles. You say that when it starts moving up fast, it will really move. But again, this cycle is different, as you pointed out earlier. So really don't know what could happen second half. I do think we're going higher in the second half. And again, this is not investment advice, but I do think we're going, the tailwinds are strong. And there aren't really any headwinds other than the kind of meh confusion that we're seeing in the market at the moment.
We should. That's why Bitcoin needed a marketing team to settle the meh confusion. Everybody could use a little assistance with the meh confusion when it comes to new tech. I want to chat about a few catalysts. One is what you've talked about before, which is nothing stops this train. All roads lead to currency debasement and governments printing money. What's your thoughts when you look at the major economies right now? Big Beautiful Bill has passed through the Senate. It's led to this massive war between Trump and Elon, as I joked about earlier. What's your thoughts on, if you look at Japan, if you look at the EU, if you look at the US, if you look at China, these major economies, do you think that they're going to start printing stimulus, printing money? Where do you think they go over the next year?
The answer is definitely yes, and we're already seeing it. And obviously I live in the European Union, I live in Spain, so I can talk more personally about that. But even just looking at what Japan is doing, what India is doing, what Taiwan is doing, I mean, we're seeing this pretty much everywhere. And okay, coming over to the EU, and this ties into something else I was referring to before, the financial repression is probably not the right word there, but you'll see what I mean in a second. Europe, so one of the best things that could have happened to Europe, I should say, was the speech that J.D. Vance gave in Munich. I think it was in February, where he pretty much told Europe to, take care of yourself and stop, living off of our generosity. He phrased it very differently, but that was the overall message. And it was a big shock to Europe. That is generally guilty of assuming that things will continue the way they are. Europe has a reputation for being fairly conservative and slow. And to be honest, it's fair. That said, they have galvanized, and it's not easy for them because they have to change their way of thinking and change their way of managing the economy. Again, this is not easy for Europe to do, but they are ramping up spending. I mean, even just looking at the recent results of the German election, that's an example. I mean, Germany is now building up its military, something that we didn't think we'd see in our lifetimes. And we're seeing huge ramp up of military spending along the border with Russia as well. So best thing that could have happened, because it is forcing Europe to actually stimulate, and arguably it is very needed. But here's where, and that brings in the whole currency dilution, et cetera, et cetera. But here's also where the financial repression part of it comes in. I don't know if you noticed, but I think it was just a few days ago, the European Union put out a post on X saying, talking about the urgency of retail savings to help Europe achieve its economic goals. Your retail savings have to be harnessed to help Europe achieve its economic goals. And so all of us retail savers were thinking, wait, what now? And just how are you going to go about doing that exactly? And it is a reminder that when backs are against the wall, authorities are going to do whatever they feel they need to do to get done what they feel they need to get done. And if that means not confiscating savings, but directing their direction, then they will do that. If it means, taxing certain types of investments so that money doesn't go there, they will do that. And this is the big reminder of the value of freedom of choice when it comes to your savings, your right to do what you want with your own money, et cetera, et cetera. And while we can definitely say that has to be a fundamental principle, we also know that pension obligations are not going to be met going forward. So things have to change. And this comes back to the sort of chaotic interregnum I was mentioning earlier. Things are heading right into nothing stops this train. Yes, Lynn Eldon coined that, and hats off to her for that. My response to that is, well, global, yes, but I just want that something will eventually stop this train. We don't know what that is. It's not going to be polite, but something eventually will, because nothing goes on forever.
Yeah, because like some of those statements that you make there they're shocking statements, right? They really smack you in the face and make you go, whoa. But the thing is, right now, everybody doesn't want to take the hard pain right now. I mean, definitely not the leaders. They're never going to take the hard pain. As you said, they're going to push the buck down the road and do whatever they need to do to settle it now and during their term in office. And so, and then the people, I think, as you said, there's a growing narrative and a growing trend of feeling that this isn't fair anymore and that we need change, but it's not at a tipping point yet, right? It still feels early. I don't know if you see, at least where I am in North America, I don't feel like it's at a tipping point. I'm in Canada, so maybe Canada's a very, very easygoing, relaxed, laid back country, but I still don't.
Long may that continue. Long may that continue.
Yeah.
Yeah. I mean, again, it depends how you define tipping point. We are accustomed to thinking that a tipping point is a moment with a before and an after. But what if a tipping point, when it comes to civilizational arcs, is harder to spot? What if a tipping point is, for instance, when Germany's far-right party starts leading in the polls? What if a tipping point is, for instance, when the UK's far-right party starts leading in the polls? Those could be 20 years from now, when our kids are reading this through the history books, those could be classified perhaps as tipping points that we don't really see in the moment. Now, mercifully, we live in democracies. Mercifully, things have been they've been stable democracies so far. But again, you just need to look at a few history books to realize that that isn't a guaranteed state. And we have seen here in Europe cases where when the authorities don't like the results of an election, they'll cancel it. And they have threatened to do so again. Now, in Germany, that didn't happen, but it doesn't take a big leap of imagination to think that had the AfD just gotten a few more seats, then that election could have had a reset or something. Again, we didn't have to go there, thank goodness, but it's not hard to see that happening next time around, which isn't that far away. Plus, we have elections coming up in the European Union soon. And while they tend to just be straight down the middle, fairly conservative, you don't mess with such a big organization, things are getting weird and people seem to want change. Polarization, which is what you're seeing arguably in the United States, what we're seeing certainly here in Europe, and what is also becoming more obvious in many Latin American countries and certainly sub-Saharan countries. Polarization doesn't ever lead anywhere stable.
Mm-hmm. And just tying it back, all of this social unrest, this polarization, this change creates uncertainty, and this uncertainty feeds into the thesis for Bitcoin going higher in the long run. I want to talk about one more catalyst that you mentioned in a recent newsletter, was you were talking about China and the potential of them softening their crypto trading rules. So back in 2021, for everybody who doesn't remember, China banned crypto trading. So you can't hold assets, you can't trade crypto. It's heavily enforced, and it's just like a total countrywide ban. But recently, there's been some things happening. What's happening that is making you think there might be a shift? Because if they did shift this could be a large catalyst for crypto assets.
Massive catalyst, because there's no such thing as small numbers in China. And I'll start with one thing that I was chuckling about early in the year is hearing President Trump talk about, we got to get behind crypto because if we don't, China will win. And I can imagine the Chinese authorities going, should we be looking at this now? Then, but they have been looking at it. There have been many reports, many speeches, and even some comments from high-ranking officials that this is something they're thinking about. It's not a priority. In other words, I don't think we're going to get any big announcements that crypto licensing is being ushered in the Chinese financial framework anytime soon, but it is something they're starting to think about because they know that crypto trading is going on. It is not illegal to hold crypto in China. In fact, recently a Shanghai court classified crypto assets as property. That's a big sign right there. Why would they do that? But it's not a priority, but it is something that they know they're going to need to address, especially if the United States is terrified that they're going to win at this. They know that crypto trading is going on in obviously in unofficial exchanges because there aren't any official ones. And surely they can see the sense of bringing the crypto trading onto regulated exchanges where they can keep an eye on it. They know crypto is being used for capital flight. Surely it would make sense to make it legal so they can keep an eye on it. And they also know that there's just a lot of money to be made here. China has a lot of excess renewable energy that surely could be put to use through state-sponsored mining like it used to be back in the day. It still goes on, but it's sort of slightly, hush-hush at the moment. Imagine if that got some official, full-throated state support. Imagine how much of a treasury they could accumulate. And this is at a time we know that they are working on diversifying their official reserves. So yes, I do think this is going to happen. Over the past week even, we've seen already some signs in Hong Kong. Hong Kong is not China when it comes to financial regulation.
Explain this Hong Kong versus China, because I think that for people who don't follow macro closely, they don't follow Asia closely, they don't necessarily understand the unique position that Hong Kong has within China.
Hong Kong is essentially a bridge. It is a separate legal and financial jurisdiction with its own set of rules and its own regulators and its own markets. And so it makes the rules for its financial exchanges, and crypto spot ETFs are legal. Not very popular, but they're legal. And Hong Kong is right now they're scrambling to get a stablecoin framework in place, and they're also working very hard on tokenization. What we are seeing is growing interest from mainland Chinese brokerages in listing crypto ETFs, in listing tokenized assets, and in crypto trading in Hong Kong, not mainland Hong Kong. And mainland investors don't have access to these products unless you fulfill certain requirements, and that list is slim. But it wouldn't be happening without official approval. We've seen over the past week China's largest brokerage, mainland brokerage, another one of the top fours also, and a couple of smaller ones, mid-tier ones. I mean, again, no such thing as small in China, but we're talking small is like 10 billion worth of market cap. That's medium. They are they are applying for stablecoin licenses, tokenization licenses, crypto trading licenses in Hong Kong. Some of them have already got those. So they're noticing. Hong Kong is a bridge, as I mentioned earlier. It is also a sort of sandbox for China mainland financial regulation. But Hong Kong can be more out there. It can be further ahead on the risk, and then China will see how it goes and then make its decisions. Hong Kong is also a link between mainland and the rest of the world, which is presumably why the Chinese mainland brokerages are so interested in getting the crypto licenses in Hong Kong, because they will be dealing with clients from pretty much all over the region.
Yeah, a very interesting catalyst to pay attention to. As you said, not something that's going to happen tomorrow or in necessarily the short term, but you could see that if those regulations did change and the Chinese people could trade crypto openly, I mean, yeah, it would just be a massive, massive catalyst. I want to shift quickly to stable coins before we wrap up here, because a lot is happening around stable coins. And I want to get your thoughts on the Genius Act. Was the Genius Act a positive, a negative for stablecoins and for the future of digital assets?
Oh, definitely, yes. I mean, it's not perfect by any means, and everyone will have something that they absolutely hate about it. But just think about it, Jay. regulation that supports crypto creation in the United States, which is the world's largest financial market, is a pretty mind-blowing concept. I mean, again, just think where we were a year ago. This is quite astonishing. And again, this isn't the world's largest financial market. But stablecoins, again, we're seeing a lot of frenzy about it. I was writing this morning about the stablecoin frenzy in South Korea, for instance, which apparently is behind the South Korean stock market being the best performing Asian market so far this year because of stablecoins. I mean, this is because of a token that has stable in the name, yet they are still driving prices through the roof of certain companies that are applying for stablecoin licenses. We saw a taste of that in the United States with the Circle IPO this morning. I think it's 180% higher than the IPO price, which is ridiculous. And again, South Korea is a country that is very crypto friendly as it is. Stablecoin seems to be getting them really excited. And we have to ask, why compare what's happening in the United States with the Genius Act with what's happening around the world? And this is something that was commenting on earlier on in the year. The important thing really is not so much the impact on the US stablecoin and crypto ecosystems of the shift in the regulation, but it's the impact of jurisdictions everywhere else that will be scrambling to catch up. And stablecoins and crypto, they're global assets. So because of the huge shift in the United States, the rest of the world, which wasn't necessarily anti, but they didn't really see any urgency, they now see the urgency. And so we're getting stablecoin licensing and crypto frameworks pretty much everywhere. And that means that crypto assets will be able to do what they do best, which is cross borders seamlessly and cheaply. And obviously that is most reflected in stablecoins. And what gets really interesting is, one, not just the shift in how we see money, but two, the overall improvement in cross-border commerce at a time of the retrenchment of cross-border commerce, if you know what I mean. In other words, if we're going to be trading less with trading partners because of the retreat of globalization, well, let's make it as efficient as we possibly can, because that way the impact will hopefully be softened slightly. And this is, again, even before we start going down the innovations that we're going to be seeing, again, from everywhere, of the utility of stablecoins, but also of crypto markets and other applications. We shouldn't forget that stablecoins, again, stable, is not going to affect the prices very much of crypto assets beyond the stables, but stables' number one use is in crypto trading. And if there is an easier way for mainstream institutions to trade crypto, then there could be more demand for crypto. In other words, if you've got the wallet anyway, if you've got the stable coins anyway, because it's now part of your treasury policy, well, you might as well hold some ETH as well.
Mm-hmm. Yeah, it's a great take about it's very, whenever I do an episode on stablecoins, I won't lie, it doesn't do very well, because most investors who are my listeners look at stablecoins and they say, well, I can't really invest in that, right? It's you can. Before Circle, it was more difficult. Now with Circle, obviously, you have one very, very easy way to invest in stablecoins. And there's decentralized stablecoins that have tokens that you could invest in, many of which we talk about. If you want to learn more, you can read some of our recent pro reports. But the overall take that I have is exactly what you have. Stablecoin adoption is massive for crypto adoption and for a lot of our tokens that we do hold. And also, a lot of these stablecoins are built on most of the L1 smart contract blockchains that are a big part of a lot of our portfolios, right? Ethereum, Solana, you go down the list. So it's always funny to me that people are not as excited about stablecoin adoption but you framed it great. The impact around the world of everyone seeing the Genius Act and then Circle IPO, like those two events alone are going to make every country pay attention in a way that they haven't before. And I mean, I'm seeing it every day. I feel like I'm talking to somebody who's trying to launch a new stablecoin or trying to get involved in stablecoins. So the innovation happening there is it's endless, and it will really, I think you could argue that over the next decade, it could lead to way more adoption than Bitcoin could lead to, because it has way more innovation potential and the potential to touch every single person, whereas not every single person is going to invest, because there's a lot of people that just don't invest right now, but everybody will likely be using stable coins, not to mention what Stripe is doing, and go down the list. Noelle, feel free to comment on that if you want.
I was saying absolutely, and beautifully said. And I'll also throw another example in the ring. What Robinhood announced earlier this week is a sign of why this matters. Because one thing Robinhood have always done very well is the UX, the usability. For most day trade or for most retail people, buying a stock was something that your parents did, and you had to get an account with the broker, and it was a hassle. You're not going to do that. You're going to stick with your baseball cards. But Robinhood made it fun. They made it as easy as a swipe, and that pushed the retail investment in stocks onto a new level. It got it into the basements. Whereas imagine they're going to be doing the same thing now for crypto. We've always said that we know that we've arrived when blockchain is not part of the question, when crypto is not even really part of the discussion, when it just works. And there's no difference to most younger users between buying Bitcoin and buying GameStop or buying a gold ETF or whatever you want to do, because you're swiping and you're getting a little confetti or whatever incentive they choose. But the point being is, extending on what you were saying there, if you have the wallet and if you have the stable coins and it's just a question of swiping, then it becomes a why not? And you throw in the fun area of crypto as well, such as meme coins. I mean, yes, they are crazy, but let's face it, they're meme stocks, so why shouldn't there be meme coins? Investing doesn't necessarily have to make sense. It's your money. You should be able to do what you want with it, despite what the European Union may have to say about that. But it comes down to convenience, and it comes down to simplifying. You talked earlier about how macro is confusing. Crypto is confusing. And if you're starting to talk to people that are not technologically they don't have that mindset, if you start mentioning blockchain and start mentioning keys, and they don't want to know, but if you just put it on an app, they're ready to go.
It's so well said. Noelle, it's been an absolute pleasure to get you on the show today. Thanks so much for your time.
It's been so much fun talking to you, Jay. Thank you.
Thanks so much for listening in, everybody. I have to remind you, as always, that none of today's show was financial advice. I'm not your investment advisor, and Noelle is not your investment advisor. You should always do your own research and think before you make any investments. And if you need help learning more about how macro is impacting crypto and how to stay on top of the crazy changing world that macroeconomics is, make sure you subscribe to the Milk Road Macro Show, and also check out our newsletter, which comes out every Tuesday and Thursday, 5 minutes, and very simple way to understand what you should be paying attention to in macro. Thanks for tuning in, y'all. Have yourselves a wicked awesome day. We'll see you back again tomorrow. If y'all are making swaps or trades right now, highly recommend you check out Milk Road Swap. This is a DEX that we built in partnership with Cow Protocol. Why did we build it? Not to make money, just honestly so we could have a place to do our swaps for the lowest fees that we could find. This is the fees on Ethereum, Arbitrum, and Base are only 0.15% fees. This is a huge difference from other centralized exchanges that charge 0.5% or even up to 1.2% fees on their swaps. Also, you can swap on Solana, all at swap.milkroad.com. Check it out today. You won't be upset. And you can join me in my favorite place to make swaps on chain. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.